Patriot Nation, you know what I'm about to do. Well, here we go. I'm going to blow your mind yet again because we're going to buy a home for you for $100 today. $100 is going to get you a home, a HUD home, a foreclosed home from HUD, using an FHA loan, which normally assigns a 3.5% down kind of scenario, which is not bad in itself. We're going to scratch through all that. HUD is going to give you an FHA loan for $100 down is all, and you're going to find yourself in a home. I'm going to show you the overview of all this. I'm going to show you how to find these homes. We're going to talk about how to qualify for the loan for these homes, and then I'm going to give you an example to run through the numbers so you can see actually what's going on. So as I like to say, let's kick off this rodeo right now. Hi, folks. I'm Kevin Fagan. I'm the Mortgage Patriot on your side, nestled here in this hill country above San Antonio, Texas, serving proud Texas and all you great folks all around the country. So another great one today because, once again, I'm really dedicated to helping all the folks that have a hard time, raising down payment and cash to close figures to try to buy a house, because we know it's hard. Just like the last video that I made, I showed 3 transactions where I got the cash to close figure down to almost zero. In some cases, I did get down to zero. In one case, somebody got a check back at closing. So that's really kind of my specialty, is trying to bring down that cash to close figure as low as you can when you buy a home. And this video is going to be no different because I'm talking about now HUD foreclosure homes. And we're going to get into all that right now. But first of all, can you hit the like and subscribe below? And that really helps with the YouTube algorithm and brings my content up to be viewed by you and anybody else that's trying to find good content out there. So like and subscribe if you could. And let's get into all that program right now. So before we go into how you view these homes and how you qualify for them, let me give you a quick overview of what's going on here. So the program stems from HUD. What is HUD? It's the Department of Housing and Urban Development. And they compile and they gather any government-backed loans on homes that have been foreclosed on. So for example, if anybody bought a home using an FHA loan or a VA loan, those are both government-backed loans, and have gone into default, meaning foreclosure, then HUD takes back those homes, and they're really the arbitrator, if you will, the governing body of all these REO properties that the government owns. And so they assign an asset specialist, or an asset manager, sometimes they're called, to go and procure the home, get it ready for resale, and then they put it onto a website, which I'm going to talk about here in a second, but they offer them out to the general public like yourselves. And instead of using an FHA loan, instead of the 3.5% down typical deal, no, sir, they allow you to come in with just $100. Here we go, $100 of a down payment, not including closing costs, we'll cover that in a minute, to buy these homes. And so what a deal you can fall into if all the circumstances work out for you. So let's get into those circumstances now. Let's get into how you view these homes, where you can go to view them, and how you qualify for them. Okay, Kevin, you've already whetted my appetite. Show me how to find these properties. Well, it's pretty simple. You just go to this website right here. I'm showing www.hudhomestore.gov. HUDhomestore.gov. It looks like a traditional property search website. And you just type in your city, type in your zip code, and you'll see what that inventory is of HUD homes. Now, it's going to look pretty slim at first, but over the weeks ahead and the months ahead, you're going to see that list grow, because the moratorium that they previously had during the COVID days is now being unwound. And so you're going to see the normal escalation, if you will, of foreclosures, unfortunately, for people that are getting behind. But this is your opportunity. So what do you need for this? You're going to need to have an agent on your side. You have to sign a buyer representation agreement with an agent like myself, or some partner that I could recommend, or just someone that you know for your area. And they're going to go onto this website as a user. They're going to get registered, and they're going to submit bids for you. This is a unique situation. It's a bidding process. You're going to know what that bidding process is. In other words, you're going to know what the price is. You're going to be able to see what the highest bidder is at that point. And you're going to want to tell your agent, let's submit a little higher bid. And there's going to be some minimum that you have to increase your bid over the prior bid. It can't just be $1. There'll be some matrix as to what you can increase your bid on. In fact, you can go back over time, because there's usually like a 10 to 14 day window that you're allowed to have this home be in the bidding process. They're not going to announce the winner right away. They're going to wait till right at the end, either the 10 day or the 14 day period. And you can wait up almost to the last couple minutes, certainly the last hour, before you increase your bid if you really want this home. So that's kind of how the process works. Is a bidding process. Once again, you do need an agent. And let's talk about now how you qualify for the loan. So qualifying for this special FHA $100 down program is actually no different than qualifying for a normal FHA loan. And so what are those limitations? Well, you have credit score minimums, you've got debt to income maximums, and you have reserves or savings that you have to have some level of reserves. So what are those? So the credit score minimum you're going to need to have normally is about 620 on this. Even though theoretically you can get an FHA loan at 580, for this program, most lenders are going to require about a 620 or better. I can help you with the credit scores. That's just a function of time and action steps. You want to improve your scores. It's going to take a little time. It's going to take certain actions. But we'll get you to 620 if you're not already there. Secondly, of course, like we said, is the debt to income maximum. What am I talking about? You can only have about 38% of your monthly income expressed in a housing payment. Your housing payment is composed of 5 things. You have your principal and interest, your property taxes, your property insurance, and your FHA mortgage insurance monthly, and your HOA dues. All 5 of those things are comprised of your housing expenses, and that cannot exceed about 38%, 39% maybe, of your monthly income. Now, but we all know that you have more debt than that. And so you're allowed up to about 54%. You can go theoretically more than that, but it's hard to get qualified. About 54% of your total debt to income. That's your back-end ratio. So what is that? That's everything but your housing. So we talked about your housing components, your 5 things that go to the housing payment. But now we're talking about everything in addition to that. Your student loans, your credit cards, your installment loans, and anything else that appears on your credit report that's just a monthly obligation. All those things combine for your back-end ratio, and that cannot exceed, your total debt cannot exceed about 54% of your monthly income. And lastly, reserves. I mentioned reserves. In other words, so even though you might be able to get away with $100, we're going to show an example here in a second, you're going to need to have money left over. You can't just have $100 in the bank and then you give it to the lender and you're off and running with the new house. You've got to have some reserves set aside, even though you may or may not use them. Don't think you're going to get into this just with $100 in your bank account is all. That's not the case. So let's get into an example. I'm going to make all this real apparent for you. So before I get into the example, let me just talk a little bit of reality here. These are foreclosed homes. So you have desperate homeowners that have probably done things to the property, let's just say, that have been adverse. You might have holes in the walls. You might have a very dilapidated house that hasn't been cared for at all. You might have anything. It's rare that you would be able to acquire one of these homes that you just walk in and it looks like it's show ready. That's not going to be the case. What do? You can't afford to pay for fixing items if you have a hard time just coming up with a down payment to begin with. Well, HUD's got that figured out for you. So these homes are available, believe it or not, for FHA renovation loan. And they couple it with this $100 down deal. So in other words, you can still come up with a $100 down situation, but now you can get a loan not just for the purchase price, but also for potential renovations to fix or to bring up to code the home that's been poorly taken care of, let's just say, by the previous owners. So all that's going to work in your favor because, well, let me show you with an example, and I'll walk through the numbers, and I'm going to include a renovation budget. It'll all make sense to you here. Let's get into the meat and potatoes right now. As I mentioned the example now, remember that FHA only allows for primary purchasers. In other words, this is not for investors. This is not for an investment property purchase. This is not for second homes. FHA is only a primary purchase type of loan situation, okay? So you have to actually move into this house. As we go through the example, just remember that. So we're going to take a $300,000 home. We're going to assume $15,000 of repairs, and normally FHA requires you to do safety items and system items. What are those? It's usually the roof, foundation, wiring, and plumbing. Those are your big systems, so to speak, or safety issues that they want you to address. Let's hypothetically say that's $15,000 in our example. We know you don't have that out of pocket. You're going to roll that into the note. So now your loan, even though your purchase is $300,000, your loan is actually $314,900 because you're putting down $100. Wonderful. Now, the down is only one component of the 3 components of your cash to close. You're going to actually write a check based on your down payment, based on your transaction costs, and based on escrows. What are those? Well, we mentioned the down payment of only $100. Your bucket number 2, as I like to refer to, that's your transaction costs. That's your appraisal, your inspection, your underwriting fees, your processing fees, your title fees, government recording fees. It just goes on and on, right? On a project about this size, it's going to be about $5,500. Okay? Bucket number 3, what is that? That's escrows. That's the pre-funding of your property taxes and your property insurance. Because at the end of the year, you have to pay in bulk all your property taxes. And you also have to renew at the end of 12 months your property insurance. So that's what your escrows are all about. How much is that going to be? In our example, about $3,500. So where do we stand when we add all our buckets together? What's that check we're going to have to write? Bucket number one, 100. Bucket number two, 5,500. Bucket number three, 3,500. All told together, $9,100. Wait, I thought you said this was going to be a very small cash to close. Well, remember, yes, we have our seller concessions of 3% based on the purchase price of $300,000. 3% of $300,000 is $9,000. $9,000 subtracted out of $9,100 leaves you with what? $100 cash to close, writing a check for, and you've got yourself a brand new HUD home. It should be pretty exciting. We hope the inventory is there for you. If it's not, we'll figure out something else. But put it in the like and subscribe, or put in in your comments rather where you are in the country, how I can help you out, and let's see if we can march on down the road and pick up a house for $100. I'm the Mortgage Patriot on your side, Kevin Fagan. Make it a great one.